From the world of politics to the world of business, this is Balance of Power with David Weston.
From Bloomberg World Headquarters in New York to our television and radio audiences worldwide, welcome to Balance of Power. We awoke today to news we had been waiting for, preliminary results on the effectiveness of the Pfizer vaccine in combating the Omicron variant of COVID. To take us through those results and what comes next, welcome now the chairman and CEO of Pfizer, Dr. Albert Bourla. So, Dr. Bourla, thank you so much for being back with us. We had the President of the United States tweeting out first thing this morning, calling your data encouraging, but saying it really says you need a booster. So let's get right to the heart of it. 2 shots versus 3 shots. What's the difference in the effectiveness with respect to Omicron of 2 shots of Pfizer versus 3?
What we have is difference in the neutralizing titers. They are highly correlated with effectiveness, but we need to wait until we have real-world data to understand the effectiveness. What I think the data are telling us, it is that basically 3 doses of the Pfizer-BioNTech vaccine will provide for Omicron the same protection like the first 2 doses provided for the initial strain, the original strain. And this is very high because, as you can remember, it was on the 95% effectiveness, the first 2 doses. This is what we know. We also know that the 2 doses alone for Omicron likely are not enough. They are having a very, very big drop, dramatic drop of neutralization titers, only the 2 doses. This doesn't mean that we won't see efficacy because there are other elements of the immune system that we haven't measured, and those could provide effectiveness, particularly against severe disease. It's more challenging to provide against infections. But the third one will do the job. And this is why it is so good news, and we need to make sure that everybody's getting the third dose.
So to be precise, if I can, Dr. Bourla, based on, as I understand it, preliminary data now, does the third dose get you back up to the 90 to 95% number of effectiveness that you had before?
Theoretically, it gets you back to the same neutralization titers that we had when we saw 95%. It must be a correlation, but it's not always absolute, so we need to wait and see.
And just give me some sense of how much the dramatic drop in effectiveness is for the 2 shots. If you only get 2 shots, if you're starting at 90, 95%, how far down does it take you? 70, 50? Where do you end up?
We don't know in effectiveness, as I said. We will see only with real-world data. But in terms of neutralization titers, we went down to 25 times almost down. And then with the third dose, we restored that back by going 25 times higher.
Doctor, you and Pfizer have been very clear in saying this is preliminary data. Give us an understanding of the range of possible error here. How different are the final data likely to come up? Do we have a sense of that?
Yes. These are data that we are doing with an assay, but it is faster but less accurate. It's called the pseudovirus. We don't do the trials on the real Omicron variant. We do it in a construct that we created in the lab, and it is almost like the Omicron. This is a very standard process that we are doing everywhere. But way more accurate will come in 1 or 2 weeks. And even if we have the more accurate, what really I think will be the final verdict will be the real world data, when we see what happens in the real world. If people that they have the 2 doses are protected, if people that they have the 3 doses are protected or not. Those are data that we are expected to see towards the end of the year, again, in enough numbers. Now we see it, but it's small numbers. We can make mistakes. And all of that will come together, I think, before the end of the year so that we can assess the situation. If indeed a new one, David, I have to say that we have now very high level of confidence that that will be very effective. Because in our labs, what we saw yesterday was not only how the virus responds to the current vaccine in 2 or 3 doses, but also to experimental vaccines that we had developed and we have in our labs. Those are giving us a very good direction that if we make one that it is precise, tailored to Omicron, that will be very, very, very effective.
So,
Also,
Dr. Borla, that's exactly my question, actually. Just explain to a layman here. If these preliminary data bear out in the real world with the real world virus, would that indicate we do need a new vaccine or not?
if they indicate that we do need a new vaccine, particularly the real world data, we will know, and we will have one if we need in March. And I believe that if we have one in March, that will be very effective, given the data that I have seen yesterday. And I believe also, as I said before, that we will not lose any of the 4 billion manufacturing capacity per year that we have with the current one. So between the current and the new one, if there is a need for a new one, we will still produce 4 billion doses.
So explain to a non-scientist here, let's assume you need a new vaccine. You develop the new vaccine, which is effective with respect to Omicron. Is there a risk that will be less effective with respect to Delta?
Yeah, it could be. That's why we want to make sure that we are having always the best possible broader protection. And we don't go lightly to another vaccine because we don't want to depart from the original strain, which is the ancestral strain. But if there is a need, we will do it. Actually, we are doing it. If there is a need, we will use it.
And as I understand it, you think that you would, if you need a new vaccine, you'll be able to deploy that as early as March. Is that correct?
I think as early as March, we should be able to have the doses and be ready to manufacture it at very large quantities.
So, Dr. Borla, do you think we're going to have to get some sort of booster every 6 months as new variants come up?
Before, David, I had made the prediction we will need the third dose between 8 and 12 months, and then an annual. After Delta, we realized that it's not at 8, it is at 6 months that we need it. And then an annual revaccination was what I was saying. With Omicron, if we stay with the current vaccine, we may need to have a little bit earlier, every 6 months, the booster. But it's not known right now. But with what I see, the chances that, for example, if we are restoring with the third dose the efficacy that we have with the second, as we remember, the second lasted 6 months. So it could be that we are restoring something that will last 6 months and not a year. This is something that we are monitoring very carefully.
So, Dr. Borla, in addition to the vaccine and all the work you're doing there, Pfizer is also working on an antiviral, a pill that can be taken, as it were, a therapeutic. Could you give us an update on where that stands? I know that you've submitted data to the FDA. Has the FDA asked for more data?
Yes, the FDA asked for more data. Basically, we submitted the interim analysis. The FDA wants to see also the full analysis data. But in the meantime, they are reviewing everything that we have submitted, so they are not losing time. We will have the final data in several days. So it's a matter of 1.5 weeks. And then we will submit.
Sorry, go ahead.
We will submit those data once we have them ready in, let's say, 1.5 weeks.
And I understand this is not within your power. It's the FDA, after all. But do you have any sense, given your past experience with the FDA, of the sort of timetable when we might have an approval? Before the end of the year?
They have a very high sense of urgency. I can't speak about them, particularly setting a deadline, but it is a scenario that, yes, if they like the data and they don't go to an advisory committee, which is, again, their prerogative, they need to feel comfortable, we may have it. What I know is that if they approve it before the end of the year, we will have thousands of doses here in the US. Already we ship from Germany, that our manufacturing plant in Germany, here in the US.
Not to be clear, and again, I'm not a scientist, as you know so well, Doctor, but as a non-scientist, this will be fully as effective as it would have been against Omicron, because this is something that happened after you have the disease, right?
It's very much, we have a very strong belief that that is not affected by Omicron at all. So, which means that the results that we have seen, which was a 90% efficacy almost, should hold again. You take it, if you get the disease, the benefit is huge, because instead of 10 people going to the hospital, only one will go if they take the vaccine, which means that you are not having crowded intensive units, and of course human pain to avoid that people will have to go to the hospital and suffer severe diseases. That's not going to be the case. They can stay home if they're unfortunate to get the disease, and no one died.
Dr. Borla, a final question here on the antivirals. How can we ensure that people take the full course of treatment? To get a shot, you go and you get a shot. You either get the shot or don't get the shot. As I understand, you have to take this pill over a few days' time.
Yeah, you need to take it. It's not anything excessive. It is in the morning and evening, for 5 days. Always with every treatment, we know that there is a small percentage of people that they are not compliant with their course of treatment, and that's not good. Now, because it's COVID and there is a lot of fear around, I think people will take it. Thanks.
Okay, Dr. Bourla, thank you so much. Always a pleasure to have you on and really informative. That's Dr. Albert Bourla. He, of course, is chairman and CEO of Pfizer. Coming up, regulating cryptocurrencies. We talk with former CFTC chairman Tim Massad. This is Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. The House Financial Services Committee is holding hearings today on cryptocurrencies and specifically on maybe regulating them some more. Welcome now an authority on the subject. He is Tim Massad. He served as chairman of the CFTC and is now a senior fellow at Harvard's Kennedy School. So, Tim, great to have you back on. Basically, what I'm hearing from these cryptocurrency, and a lot of them are exchanges, let's be clear, saying, yeah, the regulation would help us. They seem to be open to it, but I don't hear many specifics. What specifically do you think that they should be considering today?
Sure. Well, I think there is a lack of a clear federal regulatory framework for the exchanges. They're not really regulated by any federal regulator. There is some light touch state regulation, but I think a federal scheme would help in terms of ensuring transparency and market integrity. The other big issue that is coming up in the hearing is what to do about stable coins. You know, most crypto tokens like Bitcoin, their value is simply what people think it is. They're not tied to anything. Stable coins are a particular type of crypto token, which where the value is pegged to something else, like the US dollar. And the ones pegged to the US dollar have grown dramatically. They're used in the crypto sector because they're a very efficient way to buy and sell other crypto tokens, but they have potentially much greater applicability. They could really help to speed up our payment system and make it more efficient. And, you know, most people don't really think about the payment system, right? You've got your credit cards, you've got mobile banking, it all seems fine. But in fact, the US system is relatively slow and expensive compared to other systems. We pay a lot in the prices we pay for the credit cards that we all love. And stablecoins could actually improve our payment system, but we need to put in place a proper regulatory framework for those too.
So I think it's fair to say the administration is at least moving in that direction. There's a presidential working group that's sort of come up with some recommendations. You've looked at them. What do you think about the recommendations? What are they and how do you assess them?
Well, I thought the report was very good in describing the risks of stablecoins, but I did think the recommendation was a little too conservative, if you will. I don't think it would bring about enough competition in our payments. What it recommends is that only insured depository institutions be allowed to issue stablecoins. Now, my view is you can tailor a regulatory scheme where you say the stablecoins have to be backed by cash. That cash has to be in banks, and you limit the stablecoin issuer's activities, and then you don't need deposit insurance. And you can also make the area more competitive. You can allow new entrants, fintech entrants, and so forth into the space. I fear that the recommendation of the report in saying it should only be insured depository institutions will really just be a big win for the big banks because they're the ones that are best situated then to do this. Now, that could still improve payments, but I'd rather see more competition and innovation.
What is the rest of the world doing in this regard, and does it make a difference to us? Can we fall behind competitively?
Well, that's a very good question, David. The rest of the world is very much looking at these issues, and a lot of governments are also working on central bank digital currencies. China has rolled out its central bank digital currency. A lot of other countries are looking at that. Now, we're studying it. The Fed is studying it. But that's another area where I think we're moving too slow. I think we have to intensify our research and development efforts. That's not to say we definitely should do it. There may be other ways to improve our payment system. But we've got to intensify that research and development so that we can figure out what would a U.S. CBDC, central bank digital currency, ideally look like? How could we balance some of the competing policy issues that often come up when people talk about this issue.
So, Tim, how important in that discussion about what we might do with the central bank digital currency is the role of the banks? Because some people have said, listen, if you really go to a world where the Federal Reserve, essentially, you can have a checking account with the Federal Reserve, it really disintermediates the banks. How important is the role of the traditional banks here to be preserved? It almost harkens back to what you were saying about the stable coins and sort of ensuring the bank's position. How about cutting them out?
Well, that's a good question. There's lots of different ways you can design a CBDC. First of all, in some ways you can actually distribute it through the banks, so they're not disintermediated. You can also set it up so that the Fed might provide accounts, but those would be very limited in amount. Lots of different ways you can do it. Obviously, we want to preserve the banking system. We want to preserve not just the large banks, but also the community banks, which are very important in this country. There are ways to do that. But that's why the key is let's work harder at the research and development part. Let's really see how we might design this so that we balance all those objectives.
Tim, you spent a career really as a distinguished lawyer at Cravath, Swaine & Moore, but then you went into the government. So you spent some time in Washington now. You know that territory is terribly important. How much of that is a factor here between the SEC, your old shop, the CFTC, the Fed, others?
Well, it's important. The challenge with crypto is that it does cut across the jurisdictions of all of these agencies. So you really do need cooperation among the agencies. I think we're seeing a lot of that these days. They do seem to be working together. But the real problem still is we just don't have a federal regulatory framework that's adequate for crypto. And again, it wouldn't take that much. We need some basic rules for stable coins. They don't exist on the books today. Again, there's some state regulation, but it's really not adequate. And we need some basic rules for the crypto intermediaries, the exchanges, and so forth. That would do a lot. And then, I think beyond that, the agencies can work together and work out a lot of the details.
You touched on perhaps an important issue, which is state regulation, because right now, as I understand, some states are asserting some regulatory authority. Is it important in this structure that's set up that it basically preempts states and make it a federal matter?
Well, I think in certain areas, we do want a consistent national framework, just as we have with securities. We still have state securities laws. We call them blue sky laws if you're a lawyer. But we have this federal scheme that we've had in place since the Depression, which has worked very, very well and has made our capital markets the envy of the world. So I think it's kind of similar to that. We need an overall federal framework. But there'll still be areas where the states take the lead. There's uniform commercial code issues with respect to crypto. How do you treat crypto under those laws? That's a state issue. There's state chartering of banks still, and that will be relevant to crypto. So there will still be areas where states take the lead, and state laws are very important.
So, Tim, if someone were listening to this who's not familiar as you are with Washington, I think they might be perplexed. They say, wait a second, what's the problem? Republicans want to regulate it. Democrats want to regulate it. The industry itself, at least a lot of it, says they'd like regulation. So what is the problem? Why don't we just do it?
Well, I think, I think members of Congress are getting more interested in this, and that's good. They're getting educated. The hearing today is a good example of that. Federal regulators are focused more on it. But there are differences in opinion as to how we should go about it. And, it just takes time to work that out and get it right. Hopefully, given this, increased attention, we can move forward in the near future. But, you never know in Washington.
One last one, which may be unfair. Is there the competence, the intellectual capital up on Capitol Hill to really understand this and regulate it in a sensible way?
Well, this is a complicated field, and it's a fast-moving field. It's innovating constantly. So Congress, if it does anything in here, and I only think there's a few things they should really do, it should be very principles-based. It should not try to get into the details. It should basically delegate responsibility to a federal agency under some very broad guidelines. We know what those are, for example, with respect to exchanges. We know we want transparency. We know we want integrity in trading. We know we want reporting. We know we want investor protection. Lay out some core principles and then let a regulator implement rules and be able to change rules as the sector develops. And similarly with stable coins, the Congress could adopt some basic guidelines and then delegate it to the Fed or the OCC, the Office of the Comptroller of the Currency, to implement a framework.
Some clear advice. I hope they're listening. Thank you so much, Tim. Always great to have you with us. It's Tim Massett. He's former chair of the CFTC. Coming up later this hour, we're going to hear from Ken Benson of SIFMA on their annual year-end report on the state of the economy and the financial industry. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and radio. I'm David Weston. It's time now to check in on the markets. With that, we turn to Kriti Gupta. So, Kriti, it looks like maybe they're taking a little bit of a breather in equities today.
A little bit of a breather, but then you look at the NASDAQ and you see that tech outperformance. So, and a lot of that has to do with Apple in particular. This is your best three-day rally since January. And of course, it's been having a struggle lately because they've been dealing with those supply chain issues. They've been saying maybe they're also dealing with demand issues that they might not have to have as much iPhone revenue as they have in past quarters. But then this week, just having a completely great day, nearing that $3 trillion market cap, which, by the way, is as big as Germany and Saudi Arabia's entire stock market. And a lot of this has to do with simply the fact that they are saying, well, to their suppliers that now they have to maybe ramp up demand from November to January.
But let's harken back all the way to last week. How's the bond market doing? Because now we know they're going to start tightening, we think, the Fed.
Right.
And yet I don't see much of a tantrum. I mean, it's up a little today, but...
Right. The 10-year yield not doing a ton, kind of trading in a range, but the real action is going to be in the 2-year yield, which was really hiking up. I think it's up 0.7% this morning. So you do, or afternoon, I guess now, but you are seeing those rate hike bets continue to rise, especially ahead of that FOMC meeting that's coming up.
And does it continue to flatten the curve? What's happening in the 30-year?
Yeah, it's flattening the curve a little bit. Remember, we hit the 30-year was the lowest in a very long time. I think the lowest since January last year, but it is still flattening the curve because there is still that bond market uncertainty. So you want to keep an eye on not just the bond market, but the equity market too, because the volatility metric, the VIX, is also rising and finally catching up to the bond market. So there's a lot going on in the cross. But at the end of the day, not a ton of certainty, and that's why you're seeing all these correlations kind of out of whack.
And that's why we need you, Kriti Gupta. So thank you so much for being here for the report on the markets. Coming up tomorrow, I'll be speaking with Bank of America CEO and Chairman Brian Moynihan. You're not going to want to miss that conversation. It takes place at 2:30 p.m. Wall Street time. And this is Balance of Power. We are on Bloomberg Television and on Bloomberg Radio. This is Balance of Power on Bloomberg Television and radio. I'm David Weston. For Bloomberg First Word News, we go now to Mark Crumpton.
David, thank you. President Biden said he told Russian President Vladimir Putin during their video call yesterday that there would be strong repercussions if Russia invaded Ukraine. Mr. Biden spoke to reporters as he departed the White House today for a trip to Kansas City, Missouri.
The meeting with Putin, I was very straightforward. There were no minced words. It was polite, but I made it very clear. If, in fact, he invades Ukraine, there will be severe consequences. Severe consequences. Economic consequences like none he's ever seen or ever have been seen in terms of being imposed. He knows his immediate response was he understood that.
And the president added the response could include U.S. reinforcement of NATO countries. UK Prime Minister Boris Johnson is reportedly set to announce new COVID-19 restrictions in England that are known as Plan B to stop the spread of the Omicron variant of coronavirus. The Prime Minister's Plan B includes vaccine passports for large venues such as nightclubs and an order to work from home if possible. And the UK says it will join countries including the US and Australia in a diplomatic boycott of the Beijing Winter Olympics. Athletes from those countries will take part in the games, but no government officials will attend. The U.S. announced its boycott on Monday, criticizing China for human rights abuses. It's the end of an era in Germany. Olaf Scholz has been sworn in as chancellor, ending Angela Merkel's 16-year tenure. Scholz has been Merkel's vice chancellor the last 4 years. He'll immediately face a number of challenges, including the coronavirus pandemic and the standoff over Ukraine. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Thank you so much, Mark. Every year, the Securities Industry and Financial Markets Association, we all call it SIFMA, surveys the chief U.S. economists from 27 leading financial institutions about what they forecast for the year ahead and what they've seen this past year, more important. We're pleased now to welcome back SIFMA's president and CEO, he's Ken Benson, to present the results of this year's survey. So give us a sense of what the economists saw this year, what they're thinking about next year, Ken.
Yeah, David, first of all, thank you very much for having me. It's always great to be with you and your audience. Yeah, so we did release our Economist Roundtable report. This is a report we do semi-annually. This was the sixth report that we've done since the onset of the pandemic. So that was interesting. And I'll get in some highlights, but I encourage people to go to our website, sifman.org, to look at the full report. You know, in terms of sort of high top lines, the report, the economists felt that the consensus was that GDP would end the year at 5.2%. This was down from where the report was in mid-year, and they're projecting a 3.5% consensus GDP for 2022. Unemployment, they were looking at ending the year at 4.5%. That was actually a better projection than what they had mid-year, and looking forward, unemployment going to 3.8% in 2022. In terms of inflation, predicting 6.5% year-end inflation, with core inflation at 4.9%, and that was up for sure from where the view was mid-year. I'd say there's a number of other interesting things in the report around, it's not a clear consensus, but a lean towards inflation being transitory as opposed to structural, but that's conditioned on how long that may continue. A difference of opinion on, or not a difference of opinion, but discussion around what return to office looks like and in terms of employee employment participation, and some differences of opinion there. So really digged into a lot of different issues that I think all the firms and the industry at large is grappling with.
So Ken, I don't know if you asked the question this way, but I think a lot of us would like to know, when do economists think, in fact, we'll return toward the target number for the Fed? Because 4.9% is way over that.
So there wasn't consensus on that. I think there was a split among the group as to how long this level of inflation would continue. So it really kind of split up into quartiles from there, how long it would go into 2022. And then, as you might expect, the outer bound group took the view that, well, if the further it goes, the less transitory, more structural, perhaps mostly in the in the employee context of that.
So Ken, obviously all of us are interested in this in part because of the question of how the Fed is likely to react to that at the end of this year as we go into next year. Did you get any sense from these economists what they think the Fed is likely to do?
I think they looked at it two different ways. I think they think if under the current trajectory, assuming that you don't have another pandemic wave or Omicron or whatever occurring, that the Fed will continue to move in the direction of tapering the balance sheet. On the flip side, there was a view that the Fed had ample tools and would likely re-engage if, in fact, we had a variant that would result in new public health initiatives that would impact economic activity. But the lean was that that's not going to happen.
So Ken, also give us a sense of the state of your industry, the securities and financial markets industry. How has it weathered the storm of pandemic? What is it looking forward to, or maybe even anxious about going into 2022?
So a lot of different things. So I think in terms of overall industry, and your viewers know this for sure with Bloomberg, but 2021 2021 is ending up a very strong year from a markets perspective, following on what ended up being a very strong 2021 when you think of issuance. Equity issuance as a whole is up. IPO issuance is dramatically up. We're seeing a growth in the number of publicly listed companies after a drop-off for so many years. Fixed income issuance in the corporate area was off a little bit from 2020, but 2020 was an outstanding year. We obviously saw increased volatility for various reasons that we've discussed, whether it's the GameStop or whatever. And I think we're seeing that volatility continue, not like it was earlier this year. But on the whole, the issuance, the markets are quite steady. They've handled both going remote and coming back quite well. There's still a number of issues that the firms are dealing with as they come back. We're still working on issues on what does the post-COVID world look like for the securities industry. There will definitely be some amount of remote working. It will not be monolithic across the industry or functions, but there will be some, and we're working with our regulators on that, on how you handle examinations. And then there's a whole host of issues around things like dematerializations of securities processing, e-delivery, that we'll be looking at. Likewise, a whole host of issues that on market structure going forward, not necessarily related to COVID, but things like accelerating the settlement cycle, looking at treasury markets, looking at equity market structure, looking at digital assets. I know you all are coming to the hearing today. And lastly, I'd mentioned LIBOR transition that we've been working on. There's a major piece of legislation on the floor of the House today to help with legacy LIBOR. So it's been a robust year. It's going to be a very busy year ahead.
Oh, let's just close out on that point you just raised, the settlement time, because there was this big debate, as you know, that came up during the course of the year because of some of the meme stocks, some of the trading, stopping and trading. Where are we on T+1?
So we just put out a report with our colleagues at the Investment Company Institute and DTCC, a week or so last week, on after 10 months of work across the industry of mapping out how do we get to from T2 to T1. We led the effort 3 years ago from going from 3 to 2. We're leading the effort now, working with the regulators on that. We're setting a timeline to get this done by the first half of 24, but there's a lot of work to be done. We're taking 50% of the time out. There's a lot of processes that need to be addressed, and so we've been laying, really putting the playbook together for that, and we believe that it will happen.
Okay, Ken, it's always a treat to have you with us. Thank you so much for sharing your time with us today. That's Ken Benson. He's SIFMA President and CEO. Coming up, protecting teens and children from some of the bad effects of social media. We talk with Senator Marcia Blackburn of Tennessee. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. The pandemic has had profound ramifications for the healthcare industry. And we welcome now one of those responding to the changes. He's Adam Bowler. He's the founder of Rubicon Founders. It's the healthcare investment firm based in Nashville, which has just bought a majority stake in a home healthcare company from Centene we want to talk about. He formerly served as the first CEO of the U.S. International Finance Corporation. So it's great to have you back with us, Adam. Before we get to the specifics of your new deal, give us your overall view of how healthcare has been changed in this country because of the pandemic.
I mean, obviously the pandemic's been super difficult, and so what we can also look at the positive changes. One of the things you see is much more of a drive toward the home, which we'll talk about. The other thing is telemedicine, right? I mean, you look at the companies that are providing telemedicine services, and they're up, sometimes 100 times the volume of where they were pre-pandemic, and I don't see that going back.
How does it affect your investment decisions? Because that's what you're in the business of, as I understand it, taking a look at potential deals. What do you see as real opportunities at this point?
Well, one of the things, so we just bought a majority stake in U.S. Medical Management, which is the largest provider of physician house calls in the country. And what I see more and more is if you're in a health plan, you're going to want physicians coming to your home. It's something that people are demanding, and I don't think that's going to change. And so when I think about it from an investment perspective, we both start companies and buy companies. I'm thinking, what does the future hold? And so when I look at something like house calls, I think that's what you're going to see going forward. It's a little bit back to the future, right, the 1950s, but people are demanding more and more healthcare meeting them where they are.
So that sounds expensive, I must say. We don't get house calls very often. How much of that is going to be Medicare or Medicaid supported?
It is, so it's government focused because the people that are getting house calls are people that are frail. And think about it this way, right? Think about how expensive in-facility nursing home services are. When you age, when your parents age, you don't want to be in a center, you want to be at home. So from that perspective, it's actually cheaper for Medicare to have house calls in the home than it is to have people in a nursing home. It's a lot safer, and people are happier if they can stay in their home.
So as you made this major acquisition, buying it from Centene, what are your plans for it? What does it need? Does it need capital? Do you need to expand it? What's next for your company?
So it's definitely a big growth investment. So our plan, sometimes people buy things and they're cutting back and they're just focused on efficiency. That's not the play here. Here, what we're going to do is we're going to expand it in a major way. And so one of the things we did with Centene, they're keeping minority stake, and they said, listen, we want you to expand this across our entire network. And so part of it was a contract to expand across the entire country. So we're already in 20 or 30 locations. You're going to see USMM come much, much broader, and we're going to partner with other plans too. Centene was very clear. This is a service that needs to be offered to everybody. And so for viewers, I mean, you can have a house call. You should demand it. You should demand that for your parents, but we'll be coming to a town near you as we expand.
So obviously, healthcare is such a large portion of the economy overall in the United States. The government has a lot to say about it. How sensitive is your business to what happens in Washington?
It is sensitive. I mean, look at the new bill that's being proposed. There's a lot of dollars there that is going toward home-based care. And that's the interesting thing about home-based care is, as I said, it is better than being in facility. It's cheaper, it's higher quality. So that is a part that I really agree with. But it's definitely, Washington is important. And when you look at Medicare, Medicaid, this is a huge contingent of those people that need home-based care. When I think about investments, I think about that too. Where is the country going? And what do we need to do?
So, Adam, I want to look back just for one moment here to your prior job for a moment, because while you were there was $100 million that was approved to invest in the supply chain problems with respect to fighting COVID. I don't think it pretty much got spent. What happened there? Is that just the world moved on? You didn't need it anymore? We fixed the problems without the need for the investment?
Well, there are two things there. Number one, when Congress gives us the authority to invest, we have a lot of hoops we need to run through. And so the clear thing here is you're given $100 million. I think we had about 5 months before the end of the administration. And so what we did is we ramped up the team, and then we started evaluating people for loans. But you don't want the federal government throwing money out in a month, right? So the key here is making sure that we're making responsible investments. And the dollars there, they weren't dollars that were supposed to go out immediately. They're dollars for the medium to long term to prevent another pandemic. So that's where it's spent. And so I know that DFC and my organization is continuing to look at that, continuing to push forward. But our job, and it's Congress's rules around this, is really to make sure that we're not throwing money around, but we're doing it responsibly and earning a return for the taxpayers.
Can't argue with responsible spending in Washington. Thank you so much, Adam. Really great to have you back with us. That's Adam Bowler. He's the founder of Rubicon Founders. Coming up tomorrow, the end of an era, I speak with Johnson & Johnson CEO Alex Gorski as he prepares to exit his role. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. The Senate Commerce Committee's panel on consumer protection is holding hearings today on possible harm being caused teens and children by Instagram, with the Instagram CEO, Adam Mosseri, giving testimony. Welcome now the subcommittee's ranking Republican. She is Senator Marcia Blackburn of Tennessee. So, Senator, thank you so much for being back with us. First of all, give us your sense of the problem. I know you've devoted a fair amount of time and attention to understanding the problem.
Yes, indeed, David. This is one of those issues that I've worked on since 2012. And interestingly enough, after the pandemic hit, we had moms start paying closer attention to this. And then moms, pediatricians, teachers all started saying, hey, wait a minute, there are so many adverse impacts that are coming from these social media platforms. And children are seeing inappropriate content. The platforms are not regulating the age of the children that are on this platform. The platforms are actually data mining children as young as 8 years old. And then they monetize that information. And parents have they've started to realize this. And they're looking at us and they're saying, hey, we want Congress to do something about regulating these platforms. And so this is the 5th hearing that Senator Blumenthal and I have conducted. And we are currently writing legislation that will deal with online privacy, children's online privacy, data security, and reforms of Section 230.
So one of the challenges, I would think, if I were in your shoes, is there's a range of issues there, a range of providers of social media, and they aren't all the same issue. But let's talk about Instagram specifically today, because most of what I've read has really been about body image, particularly for girls and young women. Is that what you're focused on today?
Yes, we're looking at the harms that come from Instagram and indeed body image, the depression, the anxiety that comes from Instagram, having children spending hours of their time. It is a developmental issue, a mental health issue. Pediatricians talk with us all the time. And like I said, there's quite an army now of parents, teachers, and pediatricians that are looking at this and saying something has to be done. Interestingly enough, Instagram pushed forward with what I call half measures on the eve of the hearing, trying to show that they're going to give parents more tools in the toolbox to regulate how children are online. But there's no transparency, there's no timeline for implementation, there is no process for how parents are going to be communicated with by Instagram. So, they did try to say, hey, look at us, we're doing something constructive. But it is not enough to satisfy Senator Blumenthal or me or the committee. And it certainly is not enough to satisfy the parents who are really quite concerned about this. The other thing, too, in addition to the self-harm that children learn from a lot of these videos and social media platforms and from Instagram, you also have predators and pedophiles that are using these platforms to track and stalk children.
Is this something that could be fixed, provided there was goodwill, or is there an inherent problem, a conflict here? Because some of the algorithms that may direct some of the teens and even children to images are the algorithms that allow an Instagram to make money. I mean, is there a fundamental problem here, a tension?
Yes, the tension is precisely that Instagram, Facebook, Meta, and the other social media platforms make their money by the number of eyeballs that they attract every day and the length of time that they hold those eyeballs. That is why they keep offering up content to these young users. They are trying to pull them for longer periods of time. And this is how they make their money. They're worth more as a user because it allows Instagram to data mine them and then to sell the information that is learned from that data.
One last question here, Senator. As you know, when you talk about regulating speech, including video, you hear about the First Amendment. Are you embracing the notion that perhaps there's more leeway for the government to regulate when it comes to children?
There is more leeway for us to focus on regulation for children and for allowing those children's privacy to be preserved. We have done that in the physical space. We will do that in the virtual space.
Okay, thank you so much. Really appreciate your being with us, and we wish you well on those hearings this afternoon. That's Tennessee Senator Marcia Blackburn. Coming up, Balance of Power will continue on Bloomberg Radio. In our second hour, we are going to get to talk to Labor Secretary Marty Walsh about plans for rolling out the infrastructure program now that it is the law of the land. This is Balance of Power on Bloomberg Television and on radio.